Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about BIOGEN INC quarterly report. BIOGEN Inc. offers a diverse range of therapies and services to treat various neurological and neurodegenerative diseases. Some of the key businesses and services provided by the company include multiple sclerosis, MS, treatments, TECFIDRA, VUMURITY, AVUNEX, PLEGRIDY, and TYSABRI spinal muscular atrophy treatment, SBI and RAZA Friedreich's ataxia treatment, SKYCLARYS amyotrophic lateral sclerosis treatment, QALSODY plaque psoriasis treatment, FUMADERM biosimilars, plus BNEPALI, Etanercept biosimilar referencing ENBREL, plus IMRLDI, adalimumab biosimilar referencing HUMRA, plus FLIXABI, infliximab biosimilar referencing RMICAD, plus BYOVIZ, ranibizumab biosimilar referencing LUCNTAS, plus TOFIDNC, tocilizumab biosimilar referencing ACTMRA cancer treatments, plus RITUXAN for non-Hodgkin's lymphoma, CLL, rheumatoid arthritis, and other conditions, plus GAZYVA for CLL and follicular lymphoma, plus OCRVUS for relapsing MS and primary progressive MS, plus LUNSUMIO for relapsed or refractory follicular lymphoma development of products for, plus Alzheimer's disease and dementia, plus neuromuscular disorders, plus Parkinson's disease and movement disorders, plus neuropsychiatry. The decline of BIOGEN Inc.'s stock price over the past year can be attributed to several key factors. The slow launch and revenue for Leqembi, the company's Alzheimer's drug, have been a major drag on the stock due to healthcare systems' slow adaptation to the new treatment and emerging competition in the market. Additionally, the decline of BIOGEN's multiple sclerosis, MS, franchise has also contributed to the stock price drop. The impending patent cliff for Tecfidera and biosimilar entrants for Tysabri have negatively impacted sales. Furthermore, the discontinuation of Zurzuvae in major depressive disorder was a setback as it represented a larger market opportunity. The approval of Eli Lilly's Alzheimer's drug, Kisunla, has also introduced significant competition for BIOGEN's Leqembi, contributing to investor concerns. Analysts have expressed unimpressed views regarding BIOGEN's early pipeline and perceive the late-stage pipeline as high risk, further impacting investor confidence. Lastly, a series of analyst downgrades, including a downgrade from buy to hold by Truist in July 2025, have also contributed to the decline in stock price. These events and ongoing pressures have collectively driven a significant negative trend in BIOGEN Inc.'s stock performance over the past year. The primary drivers of revenue growth or decline for a biopharmaceutical company are multifaceted and influenced by various internal and external factors. Market competition, regulatory changes, clinical trial success, manufacturing issues, economic fluctuations, and geopolitical events all play significant roles. Market competition is a major driver, with the introduction of generics and biosimilars posing a threat to established products. Regulatory changes can also impact revenue growth, as compliance with new laws and regulations can be costly and time-consuming. Clinical trials are crucial for product development, but failures or delays can significantly impact revenue. Manufacturing issues, such as supply chain disruptions and quality control problems, can lead to product loss and shipment delays. Economic fluctuations, including changes in tax laws and foreign currency exchange rates, can also affect revenue growth. Geopolitical events, such as trade protection measures and import/export licensing requirements, can further complicate the business environment. Ultimately, biopharmaceutical companies must be vigilant in monitoring these factors and developing strategies to mitigate potential risks and capitalize on opportunities for growth. Net income and profit margins. A shift in trends. The financial summary reveals a mixed picture of net income and profit margins for the given period. On one hand, Q3 2025 saw an increase in net income to $466.5 million from $388.5 million in Q3 2024. However, on a year-to-date basis, YTD, net income declined to $1,341.8 million from $1,365.5 million in YTD 2024. Profit margins also underwent changes, with gross margin decreasing due to higher cost of sales and royalty costs. Conversely, operating margin likely increased due to lower selling, general and administrative expenses. The reasons behind these fluctuations are multifaceted. Impairment charges related to the termination of the DCA agreement and payment of transition toll tax contributed to the decline in net income. Additionally, fluctuations in foreign currency exchange rates had a significant impact on financial performance. These factors collectively influenced the changes in net income and profit margins, highlighting the complexity of financial trends during this period. The company is indeed generating significant positive operating cash flow. According to the financial summary, the net cash flow provided by operating activities was $1,692.7 million in 2025 and $2,114.6 million in 2024. Additionally, for the 9 months ended September 30, 2025, the company reported a substantial $1.7 billion of positive operating cash flow. These figures indicate that the company is successfully generating sufficient cash from its operations to support its business activities. The company's debt level and interest expenses have undergone some changes over the past year. While total liabilities increased by 3%, $11,000 million to $11,333.3 million, notes payable decreased by 9%. However, long-term debt increased from $5.3 billion to $6.3 billion as of September 30, 2025. The company issued new senior unsecured notes and repaid existing ones, resulting in a net change of zero. In terms of interest expenses, there was an increase of $7,600,000 from $59,800,000 in 2024 to $67,400,000 in 2025. However, the company expects its net interest expense to decrease due to higher interest income driven by higher cash balances. Overall, while some fluctuations are observed, the changes are not significant enough to indicate a substantial shift in the company's debt level or interest expenses. The company's financial performance was mixed across various segments and regions. Notably, neurology and rare diseases performed well due to strong sales of key products such as TECFIDRA, VUMERITY, SBINRAZA, and SKYCLARYS. International markets also showed strength in certain areas, driven by biosimilar sales. In contrast, immunology experienced moderate performance due to declining sales of RITUXAN and GAZYVA. Europe was negatively impacted by the entry of TYSABRI and TECFIDRA generics. Global demand for TECFIDRA and interferon also decreased as patients transitioned to higher efficacy therapies. The company's contract manufacturing revenue declined in the first 3 months but increased in the first 9 months, while royalty and other revenue remained steady in the first 3 months but decreased in the first 9 months. Overall, the company's performance was driven by strong sales of key products in neurology and rare diseases, but faced challenges in immunology and Europe. The management is expressing cautious optimism about the company's outlook and strategy. Despite facing significant financial and operational challenges, including decreased operating cash flow and heightened regulatory scrutiny, the company is expanding into international markets and investing in new manufacturing facilities. However, management acknowledges that there are several uncertainties and risks associated with this strategy, including internal development project delays, external market competition, and potential failure to initiate or complete transactions due to regulatory approvals. The company must also contend with significant capital expenditures required for product development and commercial initiatives, as well as the risk of investment not being recouped. Overall, management is emphasizing the need for careful planning and execution in order to mitigate these risks and achieve long-term success. The company has made several strategic moves through acquisitions and divestitures to expand its portfolio and optimize its business. Acquisitions have been a key part of the company's growth strategy, with notable purchases including Rita, HIBio, City Therapeutics, Alcyone, Pending, Denali, and Sage. These deals aim to enhance research capabilities, develop new products, and increase market presence. On the other hand, divestitures have also played a role in shaping the company's business landscape. The disposal of all shares of Sage common stock in July 2025 is a notable example, indicating that the company has been actively managing its assets to achieve optimal results. The company's financial summary reveals that it has engaged in share buybacks as a means of returning value to its shareholders. However, there is no indication of dividend payments being made during this period. This suggests that the company has chosen to repurchase existing shares rather than distributing profits directly to investors through dividends. Concerns about inventory buildup or supply chain disruption are present in the company's financial summary. A $251.1 million decrease in inventory is attributed to timing issues with production, page 90. The total inventory has also increased from $2,554.4 million to $2,371.7 million as of September 30, 2025, page 29. Potential supply chain disruptions are mentioned on page 3, citing global health outbreaks, adverse weather events, and geopolitical tensions as risks. A single supplier for starting materials in China is also a concern, with potential impacts from tariffs and government sanctions, pages 66-67. Additionally, biosimilar entrants and generic competitors have driven down demand for certain products, page 75, leading to increased costs due to inflation and supply chain disruptions, page 108. These factors indicate that the company faces significant concerns about inventory buildup and supply chain disruption. That concludes the financial summary for BIOGEN INC. Feel free to comment below, and I will be happy to answer them when possible.